Small business is about courage, risk-taking, independence, and we small business owners are survivors. Everybody has an idea for a business, but how do you take that idea from mind to market? This is the place to learn.
Small Business School.
It's a new kind of school. Together we'll learn about business from the inside out, from the people who've done it. We'll meet the men and women who are today's pioneers and quiet heroes. Their lives are the textbooks. Our classroom is the world.
Small Business School is made possible by support from the United States Postal Service, delivering the promise to America's 23 million small and growing businesses. There's no wait at the post office, in your own office. USPS.com is waiting for you.
Hi, I'm Hattie Bryant. Today you will meet Jim Schell. He started and sold 4 businesses, and in his retirement, he stays busy advising business owners. He is the author of 6 books and the co-author of Small Business for Dummies. His newest book, Understanding Your Financial Statements, is my favorite. We'll also take you inside 3 very small companies that have a fully automated accounting system.
If you are, let's say, a cabinet maker, and you decide you can make the best cabinets in your community, you open a business, and yet you don't understand that cabinet making is a very small part of opening a business. And once you open that door, hang out your shingle, you are no longer a cabinet maker, you are a business owner who happens to make cabinets. It's part of the DNA of a small business owner or entrepreneur is ask a small business owner, so how's business? And he will always tell you, sales are up, and so how big is your business? And he will always say, $1 million in sales. He will never say, made $100,000 last year, or made a return on sales of 10%. Never hear that. How big is your company? I mean, so
that's one of your goals then, as a mentor, teacher, coach to small business, and that is to get us to measure ourselves with more real numbers.
Yes. Focus on return on sales, for instance. How much are you making? Sell $1, do you make nickel, a dime, 15 cents? Focus on current ratio, your balance sheet figure. Focus on debt to equity, increasing what you own as opposed to. You have to pick something to focus on, and the reason you have to do it is because you talked, Hattie, about making a game out of it.
Right.
A game is watching these numbers improve, and everybody understands it.
You've told me I need to close my books every month. When then do I need those numbers available to me?
Approximately right now is better than exactly right later on. What that means is that the fresher your figures are, the more useful they are to you. The typical small business probably generates those numbers maybe 15 to 20 days after the end of the month. By then the numbers are cold. The knowledgeable small businesses will generate approximately right numbers 5 days afterwards.
I paid $3,000 on this one.
Now, let's meet Noel Hansen, a 35-year veteran business owner who told us about his experience with new software.
I don't have a CPA in this company. I don't ever want one. I don't need it. It's kind of like running a car. I just need to know how to turn it on and drive it. I don't need to know how it works. And I feel the same way about this software. I just want to be able to turn it on and use it, and it gives me what I want. Mary.
Located in Pasadena, California, Noel's business, Hansen & Company, provides consulting to nonprofits with a team of 4 on the payroll.
Good afternoon, Hansen & Company. This is...
I'm actually going to set up a separate set of books, which I can do with this, so I can track it, which is good for auditing purposes, because then I can give it to my accountants. They can perform the audit on it, and I can provide the audit to the city. Very, very useful tool for me.
And this is the first greenhouse that you built?
No.
Yeah, we built all of it.
Yeah.
Chris Shoddy and his wife Joni started their business, Texoma Lawn and Garden, in 1994 and now have 5 to 10 employees, depending upon the season. Located in Vernon, Texas, they recruited their son Michael to install new accounting software.
It only took maybe about an hour to get it all down, but then after that, the wizards help you out a lot. Well, it's just fairly simple, and they can do it without a kid like me, so.
Okay, so one of the things I did read in the book is that you made the comment that no consultant is worth their salt in working with a small business unless the first thing they do is walk into the business and say, let me see your financials.
Right.
What if you say, let me see your financials, and they say, well, here's my stack of invoices, and here's my stack of bills, and that's what I have. I mean, it's a cash register mentality, right? What would you say to me?
This has happened. I guess I would figure out whether I really want to help you or not. If I didn't, I would say, I can't help you without your financial statements.
What is FSU? And who needs to go to FSU?
Well, FSU is an acronym I use in the book for Financial Statement University. And who needs to go there? Anyone, repeat, anyone who is in a position to consult with or help small businesses.
Okay.
The theory behind all this is that you cannot help a small business without first knowing how to read their financial statements.
Jim reminds us that our financial statements have 3 parts. The balance sheet tells us where we stand today. The profit and loss tells us what we've done in the past. And the cash flow projections predict the future.
The balance sheet gives you the financial status of your business today. The left side basically shows you what you have, all your assets, and the right side says who owns those assets. Part of them are liabilities, part of them are net worth. The liability part means somebody else owns them. The net worth means you own them. If you have $1 million in assets and your liabilities are $400,000 and maybe it's a bank loan or maybe it's your vendor's payables, then the vendors and the bank owns $400,000 of your $1 million and you own the other $600,000.
Jim and I met at R. Wagner Arts in Portland, Oregon, and owner Nani Wadups gave us a tour. Her company specializes in custom finishes for interiors.
I'm wondering, do you use your financial statements regularly to manage your business?
I do. I primarily use our profit loss statements.
How about your balance sheet?
I don't really use my balance sheet very much.
Jim asked Nani what her gross margin is on most jobs.
Probably about 25%.
Very low, right?
Very low.
And what was it a year ago?
Couldn't tell you.
So you don't know your trend, whether you're improving or not improving. Everything is trend, and so the same thing, boil it down to day, if yesterday you sold $100, is that good? Well, it's good if the day before you sold 50, right? Or it's good if the same day the prior year you sold 50. So trend is everything in small business, no matter whether you're looking at trying to sell your business, and then it's particularly true,
Right.
or whether or not you're trying to make assumptions for budgeting purposes, for forecasting purposes, for whatever. So trend, frequency establishes trend, and trend determines so much. If you just took one balance sheet, somebody like me can look at it and tell you how liquid the company is. But from your standpoint, if you compare a balance sheet today to one yesterday, you can see how your company is changing. Trend.
How did you convince a banker to loan you the money to build this fabulous greenhouse?
We had to build a business plan through all of our previous experience. It was hard to get everything all.
So did you have to go back to old financial statements? Did your accountant come in to help you? How'd that happen?
Well, actually, we didn't have an accountant at that time, so we just did all that on our own, and I guess it worked out okay.
Because you got the loan.
That's right.
Okay, now that you're using an integrated accounting system, if you need another loan, is it going to be easier?
It was easier because we've already gotten a new loan under this new system.
Too many small business people think that their financials are sacred, that nobody can see them. They're not that big a deal. And they're particularly not that big a deal when you're dealing with someone that is going to, in a case of a large vendor, say, tell you what, I'm going to carry you for 30 days. I'll give you net 30-day terms,
Right.
which is in effect, I'm going to loan you money for 30 days. They should be allowed to see your financials.
Of course.
So they don't get a right to a new lease.
Lacey Marlette has been Noel Hansen's CPA for over 10 years.
From their listing of cash receipts and cash disbursements, which has some detail in it, we're able to produce for them a balance sheet and a P&L. And that's of some importance to them. What's more important is from that we can begin projecting out from a tax planning status where they are, what they need to do regarding salaries, whether they're going to have a tax liability, whether they're not, how to best plan for the year, whether they should do a pension plan.
But now, Noel can produce a balance sheet anytime.
The coolest thing about this program is the fact that I can see on the front company page everything I need to know about the health of my business right now. And I don't have to think any further than that. I can move on and do what I like to do best, which is working directly, one-on-one, with my clients, solving their problems.
If someone comes to an advocate or a CPA or a banker for help than a small business owner, they ought to come with their financials if they're asking for help, right?
Absolutely. Let's go back to a basic tenet here. You cannot impact the profitability of your company without doing one of three things: increasing sales, increasing gross margin, decreasing expenses, right? How do you know where the leverage is, what needs to be done, unless you can see the figures that give you the relationship between all those figures? What's the ratio of your current assets to your current liabilities? Do you know that number?
I don't.
You need to understand your balance sheet. Just as much, it's more important than your P&L. The P&L tells us what the results of our operations have been for the period covered. So, and if I just said that financial statements should be monthly, so it would be, if this is March the 10th, we are going to get our kick-out financials that shows us what we did during the month of February. So a P&L says how much we sold, that's sales, right?
Right.
The gross margin part of it is, the next section is how much we made off of those sales.
Right.
And then the expenses are what did it cost us to provide all the administration. And so then the bottom line, which is where everybody, they do know that figure, right? We all know to go to the bottom line and, hey, there's our net income. That's our profitability right down, that figure there.
Well, profit's what we're in business for. Usually on a P&L, I'm looking at labor costs or cost of goods. Especially on a P&L, you can see where all your money goes. The only way you can increase your profitability is decrease your costs and sell more product, which to increase your profit.
That figure, the bottom line on our P&L, is the figure that's used to pay taxes on.
So depressing.
But it isn't necessary, and we'll talk about, hopefully we'll talk about cash flow. It is not cash. It's just a figure that we pay taxes on. But having said all that, it's an important figure because taxes are important, but it's also important because, going back to the whole trend thing, it shows how we did in February compared to how we did in January. And hopefully, and we need to talk about another issue, which is number comparisons, but it also shows us what we compared to what we did a year ago in February.
The P&L gives us many numbers, including costs of labor. Nance Yale is the office manager at Hansen & Company, and she's happy to have new payroll tools.
Every month I send a payroll summary outside of the office to an outside consultant who figures the taxes and everything, and then sends it back to me and tells me how to fill out my little forms and send it on. There are mistakes sometimes. Now I'm able to do the whole process myself, and I'm able to save the monthly expense of paying it, and I also can keep the control in the office where I know it's being done right.
Your gross margin's too low, 25%. You know that.
I do.
So there's only two ways to improve it. Number one is to be more efficient at the
Right.
manufacturing part.
Right.
The second is to increase your prices.
Right.
And where's the leverage? for you? Which one of the two is the direction you need to go?
Well, in our case, fortunately, we don't really have very much competition, and so we have raised our prices.
If you're only making a 25% gross margin, you have to raise your prices.
Yeah. Well, we've created like what we call a bid sheet, and we put in the estimated cost of labor, estimated cost of the materials, and we have a formula that we've created with our CPA for approximately, how much more we need to add to that to cover our overhead and taxes and things like that.
My guess would be that as you do those quotes, that you generally plug in more than 25% profit.
Yeah.
But
in the end,
it isn't there. So something is wrong with the job costing, right?
Yeah, well, it has been.
The gross margin now is 25%. What should it be?
I don't know. I mean, all I know is that the bottom line sure needs to be a lot higher than it is.
At smallbusinessschool.org, there is self-help study for people who want to start a business and for those who want to grow the business they have. To learn more about this episode, choose the overview. You can read every word you're hearing today when you choose the transcript and go deeper with the case study. There's streaming video and access to interactive study guides throughout the site.
Cash is king for us business owners, and it's the cash flow projection part of our financial statement that forecasts our cash needs.
We talked about profitability, now we're talking about cash. Someone once said, profits are what you pay taxes on, cash is what you take home. So cash obviously measures what's in your bank account, what's in your savings account, whatever. And which is more important, what you pay taxes on or what's in your bank account?
What's in your bank account?
So we need to track that.
Help us understand the factors that play into the cash flow statement information.
Okay, well, firstly, there's the profitability of your business. Is it generating profits, which in turn hopefully will translate to cash? Is it, are you turning your accounts receivable? Are you turning your inventory? How much are you spending on equipment, furniture, and fixtures, and what have you? And how often do you pay your bills? Your accounts payable, are you paying them on time? A lot of the cash transactions are not on the P&L. For instance, if you buy equipment, that goes to the balance sheet, but it doesn't go to the P&L.
Okay, right.
When you buy inventory, it doesn't go on the P&L, it goes on the balance sheet. It all sucks up cash. So the cash flow statement measures what the P&L doesn't, which is the inflow and outflow of cash.
How did you project cash flow before, and how are you doing it now?
It was a two-part system, and
It was
hard to
bulky, and
work.
so you maybe just didn't bother to do it.
We did it, but it just took a lot of extra time. We can take our employees' time and materials and create an invoice directly in the software. This seems like it has made us more efficient and cut out a few steps on the way we did it before. Now with our integrated system, our efficiency level has gone way up, which has benefited our bottom line for sure.
When someone like me goes into a business, we'll ask, I'd like to see your accounts receivable aging. How quickly are you being paid by your customers? And then let's go to your accounts payable aging. How quickly are you paying the folks that you depend on for their products?
Right, right.
Hopefully you generate an accounts receivable aging, which will show you, as the word denotes, what your receivables are from 1 to 30 days, what they are from 30 to 60, 60 to 90. You get that report, and then you focus on keeping the percentage of receivables over, you pick a date, but generally most companies it'll be 60 days.
Right.
So one of the first things you'll always ask when somebody has a cash flow problem is, how much of your receivables over 60 days? Yeah. And if they say, I don't know, then you know what the problem is right now. They're not generating the correct reports. If they say, my receivables over 60 days are 25%, you know what the problem is. On the other hand, if they say it's over 1%, that tells you something too. We got to go someplace else.
Jim teaches business owners to develop what he calls key indicators. He has 11 generic key indicators that work for every business, but he also has each owner come up with ones that are specific to their business.
Each month you're going to generate a cash flow statement, P&L, balance sheet, and a key indicator report. What is a key indicator report? It's just what it says. You're going to pick anywhere from 8 on up key indicators that are peculiar to your business. And when I say 8 on up, the key indicator report is a living, breathing document, and it changes. And so those indicators in your business might change as you grow, as different things happen. So first remember that a key indicator report is not a generic report. It's a growing, and it's different for your business than it is for anybody else's. Basically what it does is capture the key percentages, ratios, and relationships of the numbers that come out of your P&L, balance sheet, and cash flow statement.
This is Jim's generic list of key indicators. From your P&L you get profit for the month, profit year to date, sales for the month, sales year to date, return on sales year to date, salaries and wages as a percentage of sales. From your balance sheet you get current ratio, debt to equity, inventory, accounts receivable, percentage of receivables over 60 days.
Chris, what do you consider to be your key critical indicators? What numbers tell you if you're doing good or bad?
Critical indicators, the way inventory is selling versus the previous year. Our accounts receivable for sure, and collection on that.
So accounts receivable, inventory, what about sales?
Oh, definitely sales.
Okay.
Daily sales through the register, and sales are the way our employees are scheduled, what work we can get to, what work people come in and ask us to do stuff.
How often now with the new system you've installed do you look at your key indicators?
We look usually, if not daily, it depends on my workload, at least once a week.
Well, the key indicator report has two purposes. Number one is to make your management job easier. It allows you quick access to the important things in your business, and it shows you the trend, the direction in which they're going. But an even more important use of the key indicator report is to engage your key employees in the management of the business. If you were, for instance, to hand them a P&L, a balance sheet, cash flow statement, you have trouble reading them, right?
Right.
What do you expect of your employees?
Their eyes cross, they go, no wonder I'm not the owner. I don't even want to fool with this.
Right. Furthermore, if you've got a bunch of key employees, and let's say you've got your bookkeeper, and on your key indicator report, remember we talked about you have percentage of receivables over 60 days.
Right.
And if 6 months ago your percentage of receivables over 60 days was 10%, and now they're 5%, everybody in this meeting knows that your bookkeeper is improving at collecting your receivables.
Jim points out that Nani needs a specific key indicator to watch.
But I want to go back to this 25% gross margin. This year, if I were your consultant, I would say this is your number one problem here in this company. And you should create a key indicator report, and the top item on that key indicator report should be gross margin. And you should do everything that you can do to focus on increasing that 25% to 30%, 35, whatever, within reasonable time frames. And the first place it sounds to me like you need to do is to go back to that job costing form, redo the job costing form, redo the logic with which you estimate jobs. It's too low. I mean, something's wrong here. Because my guess would be in your industry that gross margin should be up in the 35 to 40% range.
Creating financial reports and tracking key indicators would be hard without software, but now it's easy.
We're able for the first time to get quality information back right now where we are and what we're doing. And that is something I have never had in the history of the company. I now know what my receivables are. I now know what my payables are. I now know that my accounting for payroll is going to be right.
When a business owner gets to the point where his favorite day of the month is the day the financials come out, or even better than that, his favorite day of the month is the day he can push the button on his software and out will kick a preliminary P&L. When that's the favorite day of the month, then you know you've arrived at the point where financial statements are meaningful to you, where you know that you get it, that it's all about numbers.
We think Jim Schell's book, Understanding Your Financial Statements, should be required reading for every business owner who wants to grow. And these business owners are smiling because they're watching their numbers, and the numbers tell them they're growing in the right direction. I'm Hattie Bryant for Small Business School.
Small Business School is made possible by support from the United States Postal Service, delivering the promise to America's 23 million small and growing businesses. There's no wait at the post office in your own office. USPS.com is waiting for you.
If you want to learn more about starting, running, and growing a business, come to our website, smallbusinessschool.org. There's streaming video and interactive study guides.
The only way we can compete with big business is to be faster, smarter, and better. We are the engine of the American economy. We create the jobs. Small business is about big commitment. It's about sacrifice and struggle. But we do it because we say, if I don't do this, my life won't be complete.